Welcome on board the management and chat a little bit about them for this IPO. We've got Debashish Mishra, MD and CEO at SBI Funds Management joining in. We've also got Mr. DP Singh, joint CEO SBI Funds Management, and Mr. RS Srinivas Jain, SBI Funds Management as well here on the show. Gentlemen, all of you, great to have you on the board with us on ET9. Congratulations to all three of you once again. But Debashish, the question firstly on the street is that this is an entirely OFS, right? No fresh capital coming into the company. What's the actual strategic rationale for listing now as opposed to staying private?
Yeah, good morning and good morning to all the viewers. So this question has been put to us by many in the last couple of days. See, the whole purpose of coming to the market is to make the market. We are a largest player of AMC, and it's natural progression for a company to be listed, to display our governance, discipline, practices to the market and make the market more akin to us, knowing us more than a private player. Second thing is, as you rightly said, we don't need capital and it's total OFS. So coming to market will make us more visible in the market like any other players. And since all our colleagues, all our counterparts already listed, it's but natural for us to be listed as soon as possible.
But Debashish, people would wonder that at the upper band, you're already valued at about 38 times FY26 earnings, and that's a significant premium to your peers. How do you justify the multiples to a first-time retail investor?
So I was having a chat with my colleagues here, Mr. Singh and Mr. Srinivas. So, don't compare the baby and a child. At the time of listing, the value should be compared, not who have traveled along in this market. You will see also the same trajectory for our company in future. But the value at the time of listing should be compared, not people are already in the market trying to compare if somebody is coming first time to the market. That is number one. Number two is we have decided the value based on the feedback from investors. We traveled around the world. We also met many people around, looking at the market conditions to bring back confidence of shareholders to the market. You see, the last couple of months, market has been volatile. There are a lot of factors you know very well. But we want to bring those shareholders, those investors who are still in the fence, thinking to invest. So they are coming to us now, as you have seen yesterday's booking by many of the investors, customers, shareholders, and every citizen of the country.
I want to pick up on exactly that point, the volatility. Mr. Singh, good morning. Who better than you to answer this? Because individual investors, from what we can see now, account for nearly 63% of the industry AUM. Your numbers included in there. And that's up significantly from the past few years. And we've been talking about this on various platforms as well quite regularly. But tell me, does such a retail-heavy mix of SBI Mutual Fund flow or rather bring about more volatility in a sharp market downturn or volatile times such as now?
See, our job is to be true to the mandate. And when investors put in money, first I will talk about the what you are talking about, the mutual fund market. So we are true to the market. When we are given a mandate to invest in equities, we do invest in equities. As far as the IPO is concerned, we have seen very, very big attraction for our IPO. The first day itself, we have seen all HNI, both the categories fully subscribed to the size, though it was the first day. We have seen a very, very good response from the marquee investors all across the globe, as Mr. Debashish has already told. You just look at the names. I mean, how many people have shown interest in the organization, and how many people have actually certified the way companies being run by us. As far as volatility is concerned, that's part and parcel of the market, and the market is market only because of the volatility. If there's no volatility, there will be no market. So we are part and parcel of the market. We are capital market player of State Bank of India. State Bank of India is into the banking business. We as a prodigy are doing to the level best to bring value to the retail investor of the country. As we have been saying, we want to be partner in the wealth creation journey of every Indian, and we are doing it, and we are walking the talk now.
Mr. Singh, what is the overall or rather the bird's eye picture over here? because SIP accounts have grown industry-wide to about, over 100 million now. And you lead over here with 16.2 million at SBI. Is retail SIP, flow sustainable at this place? Or do you sense that it could plateau at some time?
I tell you one thing, this we are talking about this, whatever number we are talking about, but this is multiple SIPs also. The number of unique investors who are putting into SIPs in a big country like India is less than 30 million. There are multiple applications, multiple SIPs, individuals are going on, but there's a huge headroom which is yet to be exploited in the market, especially at the bottom and the mid level of the pyramid. We have not been able to do that, exploit that, because of so many other frictions in the market, especially the KYC one, which is likely to go away soon. And the biggest beneficiary of that will be fund house like ours. As you rightly said, we have got 16.2% market share in the number of SIPs. But this is, if we look at the other data points within the industry, especially even if we look at the data point of our own parent organization, who has 53 crore bank account, 530 million, and out of that, only 4 million out of that are putting money in SIPs. 530 and 4, less than 1%. Overall number of investors in mutual fund is around 1.5 to 2%. So that is the kind of number. I don't think the SIPs flows will plateau at this point of time. This will continue to happen. And after the lull in the market for last 1-2 years, I think the next 3 years are going to see a good run in the market. And this is a sentimental game. When sentiments are upbeat, then more and more customers come to the market. I think the next growth journey will start now. That's our view, rather than thinking that this will plateau or there's a cautious of this thing. So many investors who are sitting on the sidelines, they are yet to be brought to the market.
Right, Mr. Singh. Mr. Srinivas, come in here. I mean, the biggest thing which is interesting the market is the kind of relationship that you have with the SBI, which is country's largest bank, and also the largest depositors base. How do you plan to leverage that for fund management?
I think my colleague DP actually mentioned about the potential of SBI. The growth itself is significant. We are 2% of the SBI addressable market, which is, let's assume, even a 35 crore size. The headroom for us to grow is very large. So how do we want to do this? I think there are a few things. One, of course, as a fund house, we've always believed that from a first-time investor, there needs to be a hybrid kind of an approach. So we have been positioning ourselves as a multi-asset hybrid capability, which actually is an easy way to get into the market, just then to get to a equity kind of a product as a first investment. Second, from a distribution point of view, State Bank of India has 23,000 branches. Last year alone, about close to 19,500 of them distributed products. We have about 15,000, close to 15,000 NISM certified employees in the bank who distribute the product, and we are upping that number year after year. So that will improve the coverage. And lastly, I think the biggest moat we have is the digital moat the bank has built, which is the YONO app. YONO has now, as we speak, 12 crore customers. And SBI Mutual Fund is now fully integrated with YONO. And as this integration now kind of flourishes and digital marketing picks up, the self-service part of the business will now go up in a big way. 12 crore, mind you, is so large, that larger than any other fintech out there, any other large capability that's there. And all of them have bank accounts with SBI and have bank balances. So in a way to think about it, our best days from a distribution are yet to come, and especially with the digital distribution now picking up in a big way with State Bank of India, I think that's going to be a large thing. Last thing, of course, is the bank itself is committed to a financial well-being of the customers. They have been running education campaigns across the board, and a whole set of new investors are getting added. One of the things that we talked about is our B30 penetration, which is today, while we are at 20% market share, we are just scratching the surface. There's so much more that's possible there. And with education, with technology reach, and what Mr. Singh talked about, with ease of doing business with eKYC now, the new KYC 2.0 coming. So one of the beauty of that is you don't need to do another KYC again once you're a bank KYC customer. As that kicks in, I think we are going to unlock a significant amount of new investors to the industry. So all of these are all very good tailwinds for us. And I think with the State Bank of India channel, I think we are going to, in coming days, you will see a fairly good attraction.
That would be really good, in fact, if there's just one KYC and that's applicable to all the group companies. But Debashish, you've got a 15.5% market share as India's largest AMC. But you're also facing intensifying competition now from, many low-cost, passive and index funds as well. Tell me how much of your growth engine is actually now passive versus active, and where's that ratio headed for you?
So our growth in active has been increasing year after year. It was something 36, 37% 5 years back. Now it is 43% of the total portfolio. See, this active passive business will continue as a mutually complementary business. I'll not say exclusive, because the market will be always for everyone. Like I said, the whole market is expanding so well and so large. There'll be players, there'll be customers, there'll be institutions for active as well as passive. So our job is to innovate, to make product suites for every customer, every institution. And we have a large passive now, almost 4 trillion we manage, that is largest again. And also in active, much of our SIPs are coming to active business now, which is a consistent source of investment in the books. Almost 4,000 crores plus SIP comes to every month to us. So roughly it is 50,000 crores in a year. So these kind of numbers will also help us to manage active business. All the world, when we visited across the world, we found that passive is catching up. But in India, it may take some time.
Mr. Singh, this dual parentage is being talked about in the market circles right now. SBI's distribution reach plus Amundi's global expertise, and that's been central to your pitch as well. Having said that, one is wondering, 5 years from now, how will this partnership look and what would be the ownership ratio going forward?
See, first thing first, ownership ratio is going to remain the same even after some more disinvestment. Also, the ratio will continue to remain the same what it is there today, as far as the equity holding is concerned. Now, coming back to the dual parentage, that's a big moat, and that's how SBI Mutual Fund is unique to the other mutual funds in the country. All other mutual funds who have their joint venture partners, they are passive investors only. Nobody is as actively involved as Amundi is. Amundi is part and parcel of our business from every manner. The deputy CEO who comes from Amundi, who sits in our office, he came to, the current incumbent came to us in 2020 and still continuing with us. There are 5, 6 more experts who are there with us from Amundi, and they are actively participating into day-to-day management of the affairs. And same is the case, SBI is being consulted by Amundi from the global, so whenever they have anything to do with India. So this gives us a big moat. At the moment, we see some easing out of investing outside India at the mutual fund level. I think we'll be the maximum beneficiary. The way we are maximum beneficiary because of SBI in India, internationally will be the maximum, the highest beneficiaries from the international business. Moreover, now we have started our business in Gift City. We have a subsidiary, full-fledged subsidiary there. And if we want to launch a product, we don't have to even blink. We know that there's a parent sitting in Europe, which is the largest fund management company of Europe, and they have plethora of products managing 2.5 trillion euros. And they have products, I can just launch one fund of a well-managed product, which we have already started. Actually, we have already started one outbound fund where the money can be put in through LRS, and this will be investing into the global fund of Amundi. So that's the way that gives us a big advantage that we are here having the two big the parents, the large parents that always gives us a big strength for the times to come. And we will be having the largest international business. You said 5 years down the line. Yes, we are leaders in the domestic market, and we will be the leaders in the international business also 5 years down the line, and while keeping the pole position in India. That is a firm belief we have that we will continue to do whatever we are doing in a much better way.
Srinivas, while a large chunk of your revenue comes from the mutual fund side, what is the kind of strategy that you have to develop the non-mutual fund portfolio?
Yeah, I think good that you asked this question. This is something that we think is going to be a large revenue unlock in coming days. One of the piece that we are now expanding in a big way is our alternative piece. We had some regulatory clarification that had to happen. And finally, now that we have a regulatory green signal, including SBI's green signal to go full-fledged on the alternative piece, that's now picking up in a big way. In fact, the big chunk of new revenue pools beyond our bread and butter mutual fund should now start coming in from the AIF side of the business. By the way, we've already launched one product which we recently closed about 7-8 years ago, which was called a special situation fund. Similar to that, now we will have a large institutional investor based, similar to special situation, more such product or specialized debt capability. We are also now working on the PE side of the business, the PE investing through a category 2 AIF. In coming months, we will be announcing more of those initiatives. And as that expands, there is a definite large revenue unlock. There is also the piece on portfolio management services. I think we manage about, as of now, we manage about 17 lakh crores. Of course, the big chunk of that money comes from mandates from EPFO and others. But by the way, we also impact 11 crore investors directly or indirectly through this EPFO money that we manage. So in a way, we are a very large aggregator at one level managing EPFO money and also direct managers through the mutual fund. So all of these are revenue unlocks that are coming. While the PMS business is a low revenue yield business, like DP Singh talked about, there is a big revenue yield that comes from our international businesses that we manage for global clients. And of course, this new impending AIF, scaling that we will do. And that's another large revenue unlock for SBI Funds Management in coming days.
Gentlemen, it was a pleasure talking to you today. Thank you very much for joining us. Your IPO is currently open and it's almost heading to be fully subscribed. Thank you very much for joining us today.